Our Market Monitor guest tonight has upped the stock allocation in client portfolios to 65%. The rest is in bonds and cash. He's Mark Luschini, Chief Investment Strategist with Janney Montgomery Scott. Make a case, Mark, about why this is a time to buy stocks. A lot of our viewers are still very fearful of this stock market rally.
Well, I understand that, Susie, and it's unfortunate because the fact of the matter is the fundamental underpinnings for companies today is still very attractive, even as share prices have moved up as high as they have of recent. And I think that's because economic activity is continuing to show signs of improvement, and I think that lays a fertile environment for corporate profits to continue to grow, not at a terrific pace, but grow nonetheless. And that should lead to stock prices to continue to advance, particularly amongst investors who are looking for capital growth and even those seeking income, because many dividend-paying stocks offer a much more attractive alternative than the low-yielding bonds and certainly cash.
Well, let's look at some of the stocks you're recommending, and you're taking some of your own advice. Yesterday, you were in buying Apple stock. Tell us why. I mean, here's a stock that's been very controversial. It's been down 40% since its market high, getting new competition from Samsung. We'll have more on that in just a little bit. But why buy Apple?
We still think it's a terrific business. Obviously, Steve Jobs was iconic, but nonetheless, I think they have a terrific product development exercise underway under the new CEO, Tim Cook, and they're still growing, still generating profits, are sitting on $137 billion in cash, have about a 2.4% dividend yield today, no debt. And so I think accompanying growth, which should help the multiple to expand from a very low 10 times earnings today to even 12 times, along with what is likely to be some redistribution of that cash to shareholders in the form of a higher dividend or perhaps a share buyback. That should lead to better stock price for Apple.
All right. You like PNC. This is the super regional bank. We know a lot of banks are getting popular with investors. Why'd you pick this one?
Namely because its footprint in the Mid-Atlantic and the Southeast is, I think, going to be profitable as we continue to believe we're in the very early innings of a housing recovery, and we're also starting to see increased loan activity, which should help to improve their net interest margins.
All right, and let's move along from the energy sector. Halliburton, this is HAL on the big board, the big oil services company. Tell us the story here. Why do you like it?
Well, we like energy. It's a high conviction sector for us on a global basis. Halliburton is just over 50% North America, a little less than 50 international, but obviously the energy story domestically is one that has very long legs. We're very excited about Halliburton in terms of providing services and manufacturing of energy-related equipment is going to stand as a benefactor to the spend in that industry over many, many years to come, we think, and is very cheap at about 13 times earnings.
Okay, thanks for the long list of stocks. Mark, any disclosures to make?
None, Susie.
All right. Thank you so much. Mark Luschini, Chief Investment Strategist at Janney Montgomery Scott.